There's a moment every trader faces, not on the chart, not in the numbers, but in the quiet space between impulse and awareness. That moment decides everything. You can feel it, the tension before a decision, the heartbeat that quickens. When profit appears, the whisper of fear when it slips away. That's not the market moving, that's you. Every trader rides this invisible current of emotion. It rises with hope, peaks with greed, crashes into fear, and repeats again. Some call it the emotional roller coaster. But what if it isn't something to survive? What if it's something to understand? This is Mind Over Markets. And today we're mapping that roller coaster and learning how to exit early. You open the chart, candles flicker like living things. There's a pulse to it, an invisible rhythm that seems to whisper possibility. You tell yourself this time will be different. You've studied, you've planned, you've waited. And yet as your finger hovers over the buy button, a quiet tremor moves through you. Hope disguised as confidence. The trade triggers. For a moment it feels good, like being right matters more than anything else. Price moves in your favor, and a spark of excitement catches fire in your chest. You imagine where this could go. A few points higher and the chart looks beautiful, clean, obedient. You convince yourself the market finally understands you. That's the first illusion of every emotional cycle, the belief that the market rewards your insight rather than your timing. Euphoria creeps in quietly. You check your balance more often. You start doing the math in your head, what one trade could mean if the next 5 are like this. The voice of reason fades, replaced by a soft chorus of, I knew it all along. You begin to see patterns where there are none. Each candle becomes proof that you were destined for this. The market smiles and you smile back. But behind that smile, something is waiting. Then almost imperceptibly, momentum slows. The chart hesitates. You tell yourself it's just a pullback. Your conviction is still strong, but a flicker of uncertainty crosses your mind. You scroll through news feeds, searching for validation. Anything that says the trend will continue. You find it, of course, because the mind always finds what it wants to see. That's anxiety's disguised logic, bent to protect emotion. The market drifts lower. Your unrealized profits shrink. You whisper it's fine. You adjust your stop loss just a little further down. You say you're giving the trade more breathing room, but what you're really doing is bargaining with fear. Fear never negotiates in good faith. It just waits until you run out of rationalizations. Now denial sets in. You stare at the screen longer, hoping time will reverse. You zoom out the chart to make the loss look smaller. You convince yourself that long-term it's still bullish. The irony is cruel. Your need to be right becomes the reason you lose. You forget that trading is not about certainty, it's about probability. And probability doesn't care about your ego. Loss accelerates. You feel it physically, shoulders tense, stomach tightens, breath shortens. You click between charts as if another pair will offer escape. The impulse to act takes over. You double down or you hold on. Both choices come from the same root fear of being wrong. This is where most traders fall the cliff between anxiety and panic. Panic is loud. Your thoughts race faster than the market moves. You start imagining the account balance after another drop. You picture telling friends, it didn't work out. You promise yourself this will be the last mistake if only it turns around now. That's desperation, the mind pleading for control in a world built on uncertainty. Finally, capitulation. You close the trade not out of logic, but exhaustion. You stare at the realized loss and feel hollow. There's relief, strange as it sounds. At least the bleeding stopped. But underneath relief is shame. Shame whispers that you failed, that you should have known better, that maybe you're not cut out for this. That whisper can be dangerous because it tempts you to quit when the real lesson hasn't yet begun. Depression in trading isn't always tears. It's the quiet numbness after emotional overdose. You avoid charts for a few days. You scroll social media seeing others post wins and the cycle of comparison reignites. You promise you'll come back smarter. You start to feel a little better. The market begins to rise again. You open the chart and think maybe it's time. And there it is, the loop completing itself. Optimism returns and the ride begins again. Every trader lives this roller coaster at least once. Some stay on it forever. A few learn to step off early. The difference isn't intelligence, it's awareness. Because awareness turns emotion from an enemy into a signal. So how do you exit early? You start by naming what you feel. That sounds trivial, but it isn't. When you name fear, you separate it from identity. I feel fear is different from I am afraid. One gives you distance, the other defines you. Distance is where control begins. Keep a journal not of trades, but of emotions. After each session, write how you felt before, during, and after. Did you feel anticipation before the entry? Relief after exit frustration during drawdown patterns will appear faster than you expect. And those patterns are your personal emotional map. Charts show the market's behavior. Journals show yours. The goal isn't to erase emotion. Emotion is information. It tells you when your mind drifts from process into outcome, from logic into attachment. The trick is to feel it without obeying it. That takes practice. Meditation helps not because it makes you calm, but because it trains you to watch thoughts pass like clouds instead of storms. Before you enter any trade pause and ask, what emotion am I bringing to this decision? Excitement, revenge, fear of missing out. If it's any of those, the probability of error rises instantly. Not because the market punishes emotion, but because emotion blinds you to risk. Awareness of feeling is awareness of risk. Trading discipline isn't built through willpower. It's built through structure. Define the conditions that must exist before you act price volume time of day. Write them down and treat them as law. Then when emotion flares, you have something objective to lean on. Without rules, the market becomes a mirror for every insecurity you've ever had. Risk management isn't about money, it's about emotional capacity. Every dollar you risk carries a weight on your nervous system. If that weight is too heavy, you will trade to relieve tension, not to execute strategy. Reduce position size until you can breathe normally during a drawdown. The calmer your physiology, the clearer your judgment. Stress narrows perception. Calm widens it. You can't control the market, but you can control the conditions under which you engage it. That's where mastery begins, not in predicting, but in preparing. When traders talk about control, they usually mean controlling the market or controlling the outcome. But the only control that ever matters is internal. It's not about what the chart does, it's about how you respond when it does it. You cannot stop a wave, but you can learn how to surf it. That's emotional intelligence in trading, learning to move with uncertainty without being consumed by it. Every trade has two dimensions: the external chart and the internal chart. The external one shows price and time. The internal one shows belief and emotion. The first can be read with indicators. The second requires awareness. Most traders spend years optimizing entries, exits, setups, risk-reward ratios. They build systems that look perfect on paper but collapse under pressure. Why? Because systems fail where emotions begin. The best strategy in the world cannot save a mind that panics, hesitates, or seeks revenge. You think you need more information, more indicators, more confirmations, but often what you really need is less noise and more presence. The market doesn't punish lack of knowledge. It punishes lack of clarity. Let's talk about the three most dangerous emotions in trading: greed, fear, and hope. They sound simple, but each one hides in a different mask. Greed doesn't always look like arrogance. Sometimes it looks like optimism. The belief that the next trade will be the one that changes everything. The subtle urge to make back what you lost. The need to prove to yourself that you can do it. Greed feeds on potential. It makes you forget process and focus on possibility. Fear, on the other hand, thrives on memory. It reminds you of the last time you lost, the last time you hesitated, the last time you felt stupid. Fear freezes motion. It tells you to protect, to hide, to delay. But in markets, hesitation is also a decision, one that costs silently. And hope, perhaps the most deceptive of all, feels positive. It whispers comfort when you're in a losing trade. It tells you to wait, to believe, to hold on a little longer. But in trading, hope is not faith. It's denial dressed in patience. The moment you trade from any of these emotions, your risk of ruin increases, not because the market turns against you, but because you stop following your own logic. Emotional trades are not losses of money. They are losses of discipline. The way out begins with honesty, brutal honesty, not about charts, but about yourself. Ask, what am I trying to feel from this trade? Excitement, validation, control. Most traders don't seek profit, they seek emotion. Profit is just the excuse. When you realize that everything changes, the purpose of trading shifts from chasing reward to mastering reaction. You stop measuring success by outcomes and start measuring it by how well you followed your process under stress. This is where the emotional roller coaster begins to lose its power, because when you focus on process, you step off the ride before it peaks. Imagine this. You enter a trade, it goes in your favor, and you start to feel that familiar surge, the rush of possibility. Instead of leaning into it, you observe it. You acknowledge, I feel excitement. You don't resist it. You just don't feed it. Excitement fades without action. That's how you exit early. Now imagine the opposite. You're in a drawdown. The market is testing your stop. Your chest tightens. Your hand moves toward the mouse. You notice it. You breathe. You remember the rule, never act at the peak of emotion. You let the emotion pass before deciding. That's also how you exit early. This is what professionals mean when they say stick to your plan. It's not about rigidity. It's about emotional containment. The plan is a container strong enough to hold your feelings without spilling them into decisions. Over time, you begin to notice something profound. The chart no longer feels personal. Wins and losses are just feedback. You stop oscillating between euphoria and despair because neither defines you anymore. There's a quiet power in that neutrality. It's not coldness, it's clarity. It's knowing that you can experience the full range of emotion without letting it dictate your behavior. That's real control. Every time you feel a strong emotion in trading, positive or negative, imagine a flashing light in your mind that says, slow down. That 1 second of pause is the thin line between impulse and insight. The reason most traders never make it isn't lack of skill, it's lack of emotional literacy. They never learn to read their own inner chart. They can recognize double tops and Fibonacci levels, but not the tension in their own breathing. You can train that awareness the same way you train chart reading through repetition and observation. Before every trade, take 5 slow breaths. During every trade, check your body. Are your shoulders tight? Is your jaw clenched? After every trade, note what emotion dominated. Over time, the data speaks for itself. You'll see the same patterns repeating, and that recognition is your first real edge. You will notice how optimism often precedes overconfidence, how frustration leads to overtrading, how small wins breed complacency. Once you can predict your own emotional pattern, you can intervene earlier. That's exiting early, not just from trades, but from the emotional spiral itself. When you stop needing the market to make you feel something, you free yourself. The less emotional validation you seek from trading, the more consistent you become. Because now, your emotions follow your process instead of leading it. Consistency isn't built on perfect setups, it's built on emotional regulation, repeated 1,000 times until calm becomes habit. This is the real discipline of trading, the kind that can't be back-tested or automated. It's invisible on performance metrics, but visible in behavior: fewer impulsive trades, faster recovery from loss, steadier confidence. And slowly you begin to see the emotional roller coaster for what it is: not a curse, but a teacher. Each rise and fall reveals where you still attach your identity to outcomes. Each panic and euphoria points to a belief you haven't questioned yet. You haven't. When you look back, you realize the market was never against you. It was reflecting you. The volatility you feared outside was only mirroring the volatility inside. Awareness of this changes everything. You stop trying to conquer the market and start mastering yourself. You stop asking, why is it doing this to me? And start asking, what is this showing me about me? That's the quiet transformation few traders ever reach. Every trader eventually faces a moment when they realize the market isn't the enemy. It's the mirror. The volatility, the uncertainty, the sudden reversals, they all reflect the inner chaos we bring to the screen. The chart doesn't cause your emotion, it reveals it. And once you see that truth, the emotional roller coaster starts to lose its grip. You begin to understand that markets move in cycles, and so do emotions. The trick is to learn the rhythm of both. To recognize when optimism becomes greed, when patience becomes hope, when discipline turns into fear of missing out. It's not about fighting those transitions. It's about seeing them early and stepping aside before they spiral. The phrase exit early isn't just about trades. It's about leaving the emotional storm before it owns you. Exiting early means recognizing when you're no longer trading your plan, but your feelings. It means stepping back before your need to be right becomes more important than being objective. It means cutting, not just losing trades, but losing states of mind. A professional trader doesn't ride every emotional high or low because they know that energy is finite. Emotional capital is as real as financial capital, and once it's drained, decision quality collapses. That's why the pros take breaks when the average trader keeps clicking. They step away not because they're weak, but because they understand that clarity has a cost. If you feel your heart rate spike, your thoughts rush, your breathing shorten, that's your signal. You're no longer trading the market. You're trading the emotion of being in the market. That's the time to stop. Walk away. Not as an escape, but as a reset. No one ever regrets a pause, but everyone regrets a panic. The emotional roller coaster thrives on momentum. The faster you move, the deeper it pulls you in. Slowness is your weapon. Stillness is your edge. When you slow down, you start to see subtle truths. You notice how every big loss started as a small discomfort, ignored. You remember how every great trade began in calm confidence, not adrenaline. You realize that emotional control isn't about suppressing feeling, it's about expanding awareness until the feeling can't control you anymore. The longer you trade, the more you'll notice a shift. Early on, trading feels like a battle. Later, it becomes more like a meditation. The battlefield turns inward. The enemy isn't volatility, it's attachment. Attachment to being right. Attachment to outcomes. Attachment to the idea that success in trading defines your worth as a person. You are not your trades. You are not your P&L. You are the observer behind both. That perspective is what separates the seasoned trader from the emotional one. When you identify with your trades, every tick feels personal. Every loss attacks your identity. But when you view trades as probabilities, expressed over time, emotion loses its power. The goal is not to eliminate emotion, but to build enough space between emotion and execution that logic can breathe. That space is your real edge. Over time, your awareness grows so strong that you can feel the early tremors of emotion before they take hold. You recognize excitement in your chest as it rises. You sense fear before it shapes your decisions. That's the early exit, not from the market, but from the emotional ride that ruins so many traders. The market's movements are random in the short term, but your reactions don't have to be. That's the paradox. You can't control outcomes, but you can control the quality of your decisions. And that quality is built on emotional awareness. You'll still have losing trades, of course. You'll still feel frustration and doubt. But the difference is those emotions no longer decide what happens next. You can feel fear and still execute your plan. You can feel greed and still follow your stop. You can experience volatility without becoming it. That is the mastery few achieve. The longer you practice, the quieter trading becomes. Not because it's easier, but because you've stopped fighting yourself. The noise fades when you no longer need the market to prove something to you. At that point, trading turns from an emotional roller coaster into a mirror for awareness. Each trade is just another reflection and opportunity to see how you respond under pressure, to refine your reactions, to test your patience and your discipline. And the greatest insight of all emerges: the market doesn't make you emotional. It reveals where you already are emotional. The screen shows you your own mind in motion. When you understand that trading becomes more than profit or loss, it becomes self-mastery. Each session is a lesson in patience, detachment, and awareness. Each loss is tuition in humility. Each win is a test of ego. At some point, you stop needing to prove you can predict the market. You realize the real achievement is to remain calm in uncertainty, to act with clarity, even when the outcome is unknown. That's the kind of discipline that spills over into every other part of life. Because the same psychology that sabotages trades also sabotages relationships, decisions, and growth. Fear, greed, and hope aren't trading problems. They're human problems amplified by leverage. If you learn to navigate them here, you can navigate them anywhere. When you next open your chart, remember what you see on the screen is a reflection of what's within. Price moves are neutral. It's your mind that paints them as opportunity or threat. Every tick up or down is just feedback about market sentiment and about you. So next time you feel the urge to chase, pause. Ask yourself, what am I running from? When you feel the need to hold and hope, ask, what am I refusing to accept? And when you catch yourself celebrating too early, smile and ask, what illusion am I feeding? Each question brings you closer to the exit door of the roller coaster. Remember, emotional mastery is not a destination. It's a continuous process of noticing, pausing, and adjusting. Even the best traders slip, but they recover faster because awareness has become automatic. They don't wait for disaster to reflect, they reflect every day. Make reflection a ritual. After every session, write not about profits or losses, but about feelings. What triggered you? When did you act with clarity? When did you act from impulse? That log becomes your compass. Over time, you'll see emotional cycles as clearly as price cycles. You'll learn to anticipate your own psychology before it derails you. That's how you exit early, not by fighting emotion, but by understanding it deeply enough to move before it fully forms. When you can do that, you'll notice something remarkable. Trading no longer feels like gambling. It feels like flow. You stop trying to win and start trying to execute perfectly. You stop chasing money and start cultivating mastery. And in that quiet pursuit, results start to follow, not because you forced them, but because you finally aligned your mind with the market's reality. There's a saying among the old traders: the market rewards patience, but only after testing it. The test never ends, but neither does your capacity to grow. So when you feel the first signs of the roller coaster, the spark of excitement, the whisper of fear, smile. You know the pattern now. You've seen this map before, and this time you know the exits. The market will keep moving up and down as it always has, but you no longer need to ride every wave. You've learned to step aside, observe, breathe, and act when calm returns. That's how the emotional roller coaster loses its power. Not because it stops, but because you do. Remember, this mastery in trading isn't about control, it's about composure. Composure turns chaos into clarity, and clarity over time becomes freedom. If you've listened this far, you already know the truth. The market isn't testing your strategy, it's testing your state of mind. Every chart, every trade, every tick of price, they all ask the same quiet question. Can you stay present when uncertainty screams for reaction? That's the real edge, not prediction, not perfection, presence. The emotional roller coaster never truly ends. It keeps circling, waiting for those who still believe the ride controls them. But you don't have to stay on it. You can step off, you can breathe, you can choose awareness over impulse, clarity over chaos. This is how trading becomes transformation. Not just profit and loss, but a practice of mastering yourself, because in the end, you don't trade the market, you trade your mind. This is mind over markets, and this is your map out of the emotional roller coaster.